Cryptocurrencies rallied into the weekend, with Bitcoin heading for its best week since January 2021.
What's the biggest risk right now relative to banks? And everybody's flying to Bitcoin.
Investors are turning to crypto in a time where there's so much uncertainty.
What's going on in the U.S. banking system and trying to anticipate what the Fed might be doing from here on out. So that's in play too. But in general, this is a really interesting time to pay attention to Bitcoin.
Bitcoin price continues to move in the positive direction amid banking turmoil. Collapse of the U.S. banks is fueling debate about the future of crypto. Has crypto winter ended? Is the current bull run likely to continue? How will the Fed's decision affect crypto prices? In today's video, Peter Schiff has shared his viewpoint on the ongoing bull rally. So, stay tuned till the end of the video. And for more videos on economy, crypto, and market trends, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. Let's get into the video now.
What we are experiencing now, this is the beginning of the 2023 financial crisis, which is going to be a lot worse than the one we had in 2008. In fact, it was the government's 0% interest rate policy and quantitative easing that sowed the seeds for this crisis. Of course, they created the 2008 crisis, and this one is even bigger, but I think they're acting quicker this time around. In the 2008 financial crisis, they raised the limit on insurers' deposits from 100,000 to 250, because it was 100,000 before 2008. Now it's basically unlimited. They're going to guarantee all the deposits, and this is a massive bailout for all the banks that haven't failed yet, but which were going to fail during the week and next week if the Federal Reserve didn't step up and backstop all these companies, or all these banks rather, by agreeing to take on all their underwater paper. All these banks are loaded up with long-term treasuries and mortgage-backed securities that are worth considerably less than they paid. They're now able to take that paper and give it to the Fed for 100 cents on the dollar, and that is a massive bailout. It is a return to quantitative easing, and the way Americans are going to pay for this is through higher prices. Inflation is now going to go through the roof. If you thought it was bad last year, wait till you see how much worse it is in 2023 and 2024.
In 2008, the world experienced a major financial crisis that left us in economic turmoil. It also marked the beginning of a new era of financial instability that is still with us today. Peter Schiff and many other experts are highlighting that we are now seeing the early signs of another financial crisis, one that is expected to be even worse than the last one. You see, the crisis reached its peak in September 2008, when the Lehman Brothers investment bank filed for bankruptcy. We are seeing the same things in the wake of the recent U.S. bank collapses, including Silicon Valley Bank, Signature Bank, and Silvergate Capital. Another thing is that inflation is now going to go through the roof. Peter Schiff has also commented that 2023 and 2024 are going to be way worse than last year in terms of inflation. What effect is this going to have on the market? How will the Fed's decision affect crypto prices? Let's get into the next clip to know more details. But before jumping ahead, don't forget to give a big thumbs up to this video.
If the Fed did the right thing, the market would crash. But the Fed's not going to do the right thing. It has no history of doing the right thing. It is doing the wrong thing. In fact, the reason the markets like the news, apart from the fact that nobody's losing any money apparently, is that the rate hikes are probably off. The Fed is going to stop fighting inflation. The Fed is going to actually go back to creating more inflation. We're going to get a resumption of quantitative easing. In fact, quantitative easing resumed today, because that's the process that the Federal Reserve is able to bail out all these banks, is by printing money and taking their mortgage-backed securities and their treasuries onto its balance sheet. So the Fed's balance sheet is now going to expand, and more money is going to be created. And so we're going to have a lot of inflation. And inflation is good for stock prices, right? It makes prices go up. So the price goes up at the supermarket, but it also goes up at the stock market. But the problem is, I think the prices in the supermarket are going to go up a lot faster than the prices in the stock market. So you may see your stock portfolio go up, but it's not going to go up as fast as your grocery bill or your electric bill or your insurance bills.
The world is on the brink of a major financial crisis, and inflation is going to be one of the biggest problems. Prices are already rising, and they are going to continue to rise. Amid all that, Bitcoin is poised to test $30,000 very soon, but may face some resistance at that level. The FOMC meeting this week will be a major market-moving factor as well. Some are betting Bitcoin price will reach $1 million in the near future. Well, not sure about 1 million, but Bitcoin has soared to its highest level in 9 months. The crypto boost comes amid the largest bank collapse since the 2008 financial crisis. As it has become evident that aggressive monetary policy has begun to break things in the banking sector, expectations for further rate hikes are plummeting, which is benefiting Bitcoin. So, is Bitcoin a safe haven? Is it time to invest in Bitcoin? Let's get into the next clip to hear more from Peter Schiff.
People who had money on deposit at this bank, they're the ones that should have lost. But because they got bailed out, everybody is going to lose. And when Biden says your bank accounts are safe, they're at greater risk now than ever before. See, the real threat to your bank account is no longer that the bank fails. The threat is that the value of the money is destroyed through inflation. Every bank account is going to see a significant decline in its purchasing power. What I would do if I had a bank account, I had any savings there, I'd take the money out because it's going to lose value. Buy gold, buy something real. But the riskiest thing you could do right now is leave your money in the bank because you're guaranteed to lose.
Wow. All right, that's a powerful statement. You and I may talk offline. I need some advice on what to do with my money, Peter. Final question to you, real easy, because Joe came out doing what Joe usually does. Put the tweet up, please. He took no responsibility for anything in his inactions, because I know it wasn't any of his policy that set banks up this way. But I'll go back to 2008 when we saw those mortgage-backed securities fail and everything went to hell. We know what happened. I lost my shorts. So when he puts out this and says that the previous administration lays it all on Trump, it's his administration is at fault for the banks collapsing like this, is there any validity to that?
Well, not really. And in fact, look at his own Secretary of the Treasury, Janet Yellen. I mean, she did a lot more to engender this collapse than anything that happened while Trump was in office. But I'm not going to completely absolve Donald Trump for the deficits spending that occurred under his watch. He was helping to create the deficits that the Federal Reserve was monetizing. But the real roots of the problem go back to the Greenspan era and the low interest rate policy that followed the bursting of the NASDAQ bubble in 2001. That was the Fed's major mistake. That's what inflated the real estate bubble. And then they doubled down on those mistakes when that bubble popped and they went to zero and they went to quantitative easing. And then they tripled down during COVID when they just went to QE4 and just printed money like crazy. And we're now experiencing the consequences. You know, the Fed made a deal with the devil back in 2001 when QE started, and it took 20 years, but the devil is now here to collect.
The events of the last few weeks should serve to educate people on the dangers brought on by a centrally controlled economy reliant on credit and leverage. So, is it time to invest in Bitcoin? Can Bitcoin prices cross $30,000? What's your Bitcoin price prediction? Let me know your thoughts in the comments below. For more latest videos on economy, crypto, and market, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. Also, be sure to give this video a big thumbs up. I'll see you guys in my next video. Adios, and thanks for watching.